We want to look more closely at the global implications of the president's bank rescue plan and also explore tonight how foreign banks are benefiting from the bailout of AIG. So for that, we asked for Peter Coy to once again join us. He's an economics editor of BusinessWeek magazine. Good to see you again, Peter.
Thanks for having me on.
So the markets so far today seem to have reacted very well, at least to the news of this bank rescue plan. The question is, why have they reacted this way, and how long will it last?
Remember, this rescue plan is all about trying to improve the health of the banks for the sake of getting the economy going again. If banks can get back to lending normally, then the people who need money, whether that's companies or homeowners, can start borrowing, and we can get out of this really deep recession we're in, start on a more positive track. When people saw that there was hope for the bank rescue plan, they projected it over into, well, that'll mean eventually higher stock prices, so they bid the market up.
Is it a one-day wonder, or do you think we can continue this?
I am a little worried that it might be somewhat of a one-day wonder, because we've seen in the past that every time we think we finally have a plan that's going to work, it doesn't quite do the job. And again, what's crucial here is to have private investors willing to step up, put their own money to work. They're being given good incentives by the government in forms of easy money lending to amplify the power of whatever money they put in. But if they don't commit in a big way to doing this, the plan just won't get off the ground.
Western European banks are also sitting on billions in toxic loans. So how will they be affected by today's news, and are they likely to adopt similar plans?
They are moving in the direction of doing something about their toxic assets as well. Britain's approach is to guarantee the assets sit while they still sit on the books of the banks. Germany is more into some sort of a purchase plan. France is saying that it doesn't need to do anything for now. Now, when the G20, the group of 20 ministers, met in London earlier this month, they agreed that something big needs to be done, but they couldn't come to agreement on what needs to be done, so different countries are really taking different approaches.
And I want to turn quickly to AIG, because there was a tremendous amount of outrage here in this country about the bonuses that the executives received, but not so much was said about how foreign banks, in essence, were being bailed out by U.S. taxpayers when they were giving money to AIG. How did that happen?
Well, there's a big difference. The people who got the bonuses were really the culprits in here. They're the ones who actually created these terrible derivatives contracts that are ending up costing the taxpayers so much money. So that outrage was well justified. It's a different situation with these foreign banks. What they did is they entered derivatives contracts with AIG, and they're entitled to be paid. It was a fairly made contract. Now, you can say, and a lot of people are saying, that, hey, if AIG had been allowed to fail,
Precisely,
they would have been out of luck. They might have gotten paid cents on the dollar. Instead, they're getting paid dollar for dollar. And so people would argue, hey, we're talking about tens of billions of dollars here. Why not make them suffer some of the pain? And I guess the best argument against that is, hey, we need them to be healthy too. So American taxpayers are indirectly kind of propping up the entire global financial system. Understandably controversial.
Peter Coy, as always, good to talk with you. Thank you.
Thank you.